Hello, everyone, and welcome to today's webinar, Why Blockchain for Central Bank Digital Currency. I'm Vicky, and I'm leading PR for OMG Network, and I'm very happy to welcome you guys for today's event. I'm sure a lot of you have attended previous events, so thank you for joining again for today. But for those who haven't, let me just share my screen real quick. Yes, so our event for today will be talking about CBDC. And if you guys didn't see it, but I'm pretty sure you have since we announced this event on our social, but we launched our CBDC webpage. So if you guys haven't checked it out, you may go to omg.network/CBDC to find out more. But that's basically what we're going to be discussing today. We're going to discuss why OMG Network is talking about CBDC, and we're going to cover topics like what exactly CBDC is, how blockchain is the architecture for it, and more. And to just kick things off, I'm going to give you guys a brief overview or introduction of our speakers for today. So our speakers are Erica and Kasima. We'll kick it off with Erica. Erica is our senior product manager. She has a background on electrical engineering from MIT. She has previous experience in digital product management, and she has worked in a wide range of spaces, from research labs to the US government to banks. So she joined OMG Network to follow her passion for tech and financial inclusion. She also has a pet, Beta, named Fish Stick, so I think that's really cute. And our second speaker is Kasima, who is OMG Network CTO, which I'm pretty sure a lot of you guys know him already since we basically push him to a lot of events. But for those of you who don't, Kasima has spent 20 years bootstrapping in San Francisco and New York as a software engineer and an engineering leader. He's jumped into the crypto scene back in 2014 when he was still with Github, building the billing and payments team over there. And then that basically led him to joining OMG Network over 2 years ago. So those are going to be our speakers for today. And just a quick rundown of the program. We're going to be just diving into the webinar itself immediately after my little intro. And then we're going to be having a 20-minute Q&A. If you guys can see on the right-hand side of your screen, there's a Q&A tab. Feel free to drop your questions over there, and we'll go through them when we start the Q&A session later. Without further ado, just stop sharing my screen, and would love to invite Erica on this virtual stage to start it off.
Hello, let me just start sharing my screen. Excellent. So thank you very much for joining me for my very first webinar as an OMG Network team member. We are up to a number of interesting things here at OMG, and today our CTO Kasima and I are here to discuss one that is particularly exciting to us, Central Bank Digital Currency, or CBDC. So today's webinar is entitled, Why Blockchain for Central Bank Digital Currency? And while that is a central question, it is actually only one of 3 primary questions we'll be answering today. First, we'll be answering the question of why CBDC. There are many use cases for blockchain. There are also many ways to provide central bank-backed currency. So why did we, as a blockchain tech provider, feel compelled to support the notion of CBDCs? Second, there are also many technology platforms that could support a CBDC. Digital currency essentially flows between financial institutions today. So why do we believe blockchain is the right answer for a CBDC system? And third, of the many blockchain networks, why are we assured that plasma technology is best suited to power the future of CBDC systems? We'll also sneak in a bonus section on why we should be focusing on CBDC now, to be followed by our Q&A. So why CBDC? I want to start with the OMG Network mission. Now, those of you familiar with us have probably heard this more than a few times, but just to refresh your memory. At OMG Network, we believe that having access to financial services can create economic opportunities and improve lives. We see a world where anyone with a mobile phone and access to the internet is able to store, send, and exchange any type of digital value. Now let's think about CBDC. While its definition is still sometimes up for debate, let's start with this one. A central bank liability, denominated in the country's monetary unit, such as dollar, baht, yen, which is used for exchange or storage of value. It exists digitally and is issued by a country's central bank and used for monetary policy. Now, there are typically two types of CBDC discussed. These are wholesale and retail. Wholesale is essentially private and focuses on institutions that already hold a central bank account. Today, we'll be discussing retail CBDC, which will provide digital currency to the public. We decided to invest in exploring a retail CBDC platform because we believe it capable of significantly moving the world toward one in which everyone will have access to, and here's where we quote our own mission, financial services that can create economic opportunities and improve lives. More specifically, we believe there are 5 areas that can be positively impacted by implementing CBDC. First is monetary policy. In enabling the implementation of fast and cost-effective monetary policy, CBDC will promote sustainable economic growth. Second is transparency and insight. With increased insight and analysis of macroeconomic monetary flows, the central bank can be proactive instead of reactive. Third is financial inclusion. In providing equal access to financial services for individuals and businesses alike, they can begin to invest, accumulate wealth, and attain financial security. Fourth is innovative services. In integrating the traditional and fintech worlds, everyone can gain access to new and diverse financial services while ensuring consumer protection. Finally, advanced payments. By enabling a multitude of cheap, fast digital payments, domestic and cross-border transfer of value will be affordable and accessible to all. And for each of these reasons, we're proud to be part of central bank discussions as they examine the technology platforms available to enable this vision. Now I'll pass the virtual mic over to Kasima to discuss why blockchain.
Thanks, Erica. Hi, everyone. Thanks so much for joining us today. It's really nice to see a lot of familiar names in there. So why blockchain for CBDC? So in many ways, CBDC has become synonymous with blockchain. However, CBDC could easily be implemented without it. Just look at China's DCEP, which uses a central state-owned database instead of a distributed ledger. So the question of why blockchain for CBDCs as a preferred or even valid solution remains. So as many of us know, blockchain provides the ability to create a fully decentralized CBDC network. Entities other than the central bank can participate in the operation of the network, increasing resilience, security, efficiency, programmability, and interoperability. And compared to traditional financial networks, blockchains enable high-speed, low-cost transactions. I want to start with some basic blockchain functionality that is well aligned with the needs for a CBDC, and that is digital token properties. As we support ERC20 tokens on OMG Network, I'll reference that standard in particular. First, ERC20 tokens can be issued on any Ethereum-based platform, including Hyperledger Besu. Token issuance on multiple platforms is also supported, enabling future cross-chain use. Second, tokens are controlled by the owner of the issuing smart contract, allowing for them to manage supply by minting and burning tokens, as well as potentially maintaining a list of restricted wallets. Third, tokens cannot be counterfeited as they're irreplicable. Tokens issued from any other contract apart from the one owned by the central bank will not be accepted as valid. And there are many ways to secure the private keys controlling those functions. And the ERC20 standard in particular has a whole ecosystem to support it, allowing for programmability, security, and interoperability. Now, the blockchain ecosystem has grown exponentially over the past few years with mature and innovative tools, products, and services. The decentralized finance or DeFi boom has created lending platforms, decentralized exchanges, and other financial services with increased accessibility and efficiency. The ecosystem also provides a set of best practices that have been tested against a very advanced adversarial environment. As Erica will present later, our CBDC lifecycle uses a variety of those best practices. This includes leveraging hot, warm, and cold wallets to ensure funds are safely held while still accessible for immediate needs. It includes key management techniques for custodial wallets to ensure those managing wallets can keep them secure. and includes liquidity, settlement, and exchange services that help funds flow between traditional and digital channels. All this innovation can quickly be leveraged by CBDCs in adopting blockchain technology. And for those fearful of the riskier DeFi schemes out there, the added support and oversight of a central bank reduces the risk for mass adoption of these new financial services. Almost all CBDC's designs are aiming for a cash-like asset with direct claims on the central bank. Blockchain technology is uniquely suited for these cash-like properties with a direct path to true and direct public ownership of the currency. For me, the most exciting possibility for CBDC is on an open platform is the idea of public ownership. The public can actively participate in the operation of the CBDC network, becoming a true public good. The network will continue to operate uninterrupted for as long as the public is willing. Openness also paves the way for numerous possibilities for interoperability, especially at the supranational level. At the individual level, traditional digital money systems are custodial, with trusted central parties holding their funds. Blockchain technology gives us the option of true cash-like bearer ownership. In its purest form, wallets holding cryptographic keys have sole control over their funds. Wallets can still be custodial for those who don't want that responsibility. This gives people greater choice in how they want to manage their funds. Now, at their best, blockchains are trustless networks. Sometimes this can also be seen as trust minimized or distributed trust networks, but for the sake of this conversation, I'll refer to this characteristic as trustlessness. Actions of the participants in a trustless network are governed by protocols, cryptoeconomics, and consensus mechanisms, rather than by trusted centralized parties. This trustlessness is the fundamental invention of blockchains that makes them unique. Never before have we been able to create such large, trustless financial networks. By reducing the need for trust, we can also reduce much of the legal overhead to enforce that trust. We reduce the need for contracts and agreements and arrangements of liability. Again, this is most interesting at the supranational level. CBDCs are necessarily global. As large economies develop their own CBDC networks, smaller economies are at risk of being supplanted by these networks. This opens up issues of sovereignty and national security. Regional and consortium networks are going to become more important. Trustless networks are better aligned to those sovereignty issues since these networks are truly peer-to-peer. Achieving regional or consortium CBDC interoperability through trustless networks can be more efficient by reducing the need for multilateral agreements. Central banks in a particular region or economic cooperative can agree on and trust consensus mechanisms instead of agreements, treaties, other traditional forms of interacting. So now I'm going to hand this back to Erica for her to talk about why Plasma.
All right, thank you, Kasima. Up till now, we've discussed topics that could apply to any CBDC or any blockchain platform. Now I will address why we think Plasma technology, in particular, is the right choice for a retail CBDC system. As I mentioned previously, there is strong alignment between our mission and the goals of a CBDC. As such, we also have a strong alignment between central banking needs and Plasma functionality. In a recent BIS paper, they outlined the foundational principles and core features of a CBDC. These covered 3 types of features: system, instrument, and institutional. While institutional features are beyond the control of a tech provider, we believe we can help shape those while meeting system and instrument requirements. Now, before I discuss the features that Plasma directly addresses, let me quickly scan through the items that will likely be met simply through the use of blockchain technology, as Kasima discussed, or through thoughtful systems design. First is convertible. Now, there's been some skepticism that a stablecoin can hold its peg in the long term. However, as long as the central bank and the financial system continues to honor CBDC at a 1-to-1 exchange rate, my hope is that a secondary market with a different value would be unappealing and thus unlikely. Convenient and widely accepted is dependent on the architecture and the regulations that control access and use. We recommend an open platform that can ease integration with third-party systems, allowing for all kinds of new services and access points to be provided. Costs will be determined by network participants, with the central bank governing that range. While infrastructure costs may play a role in pricing, those costs are likely to be absorbed by national budgets, allowing for them to set prices as they see fit. Now, programmable wasn't actually on the list, and it's a feature that I added. There's been much discussion around smart contracts and their ability to trigger automatic payments, support safe exchange of payments between untrusted parties, etc. Smart contracts do have the ability to create transformative features. However, in addition to the possibilities that smart contracts provide, an open architecture itself can also provide similar advanced functionality without the complexity of smart contract design, by simply allowing business logic and application layers to be built on top. Now, security will always be a needed feature for a system of this importance. Blockchain meets that need with some of its basic features, such as an immutable log, consensus mechanisms, and the cryptographic algorithms behind public-private key pairs. Finally, the features of resilience and availability are met mostly by the fundamental nature of having a distributed system. Without a single source of failure and data availability apart from a central entity, balances and access to them is difficult to disrupt. There are concerns around access during electrical or internet disruption. And while those are problematic, offline or emergency balances are possible in a peer-to-peer manner and could in fact additionally support government aid in the case of a natural or other type of disaster. So that now leaves us with 5 key features that we believe Plasma can uniquely solve. Now, before I delve into the benefits of Plasma, let me give a very high-level overview of the technology. The Plasma protocol is a 2-tier system with an Ethereum-based root chain and a Plasma child chain. Ethereum, as one of the 2 leading blockchain networks, has proven itself capable of handling large-scale systems in a secure fashion. However, it does have some limitations. The Plasma MoreVP protocol was designed to overcome these and optimize functionality for value transfer in particular. It does this by batching transactions on the child chain through the creation of child blocks. These child blocks are then hashed with the hash submitted to the root chain at regular intervals. This allows for the child chain to remain non-custodial, retain the security level of the root chain, while achieving a throughput in the thousands per second. Thus, while Plasma is able to maintain the benefits of Ethereum, it also enables the following CBDC requirements. Near instant settlement. Our Plasma protocol allows for quick settlement in 3 ways. First, as just mentioned, by batching transactions into child blocks, we can achieve throughput in the thousands. Second, it leverages the proof of authority consensus mechanism to increase block production efficiency. And finally, through transaction chaining, outputs can be used as an input for a subsequent transaction without having to wait for finality on the root chain. This enables fast, sequential transactions. Plasma is also both horizontally and vertically scalable. A single child chain can host a practically infinite number of nodes and wallets to meet the needs of a particular nation or consortium. Plus, a single root chain can host an increasing number of Plasma child chains as well, which would support the future integration across multiple CBDC networks. And with the ability to handle high transaction volumes as well as scale as needed, the Plasma protocol can support the transaction needs of today and tomorrow. Our CBDC platform is visualized here. Its core component is the distributed ledger consisting of the root and child chains and Watcher network. It is optimized for CBDC by the API integration suite that is designed to support all business level functionality with the ability to adapt to the needs of next-gen fintech services. This API suite communicates directly with our CBDC software that allows the central bank and intermediaries to interact with the system. Supporting systems can also be easily integrated directly to the API suite or through the CBDC software platform. These systems include identity services, financial systems, wallet providers, cashless payment services, and more. And depending on the design decisions made by the central bank, Intermediaries, wallet providers, and non-custodial wallets can also communicate directly with that API suite. The CBDC optimized functionality is abstracted, making integration easy and allowing for multiple fintech and wallet providers to leverage the same ledger without needing to understand the complexity of the blockchain. We've also developed a working prototype of our CBDC platform to manage the entire CBDC lifecycle. We've engaged with multiple central banks to understand their needs and have incorporated them into our platform. First, the CBDC wallet application can support multiple asset types. We foresee integration with multiple CBDC networks as a high possibility. In addition, the tokenization of government securities is a logical next step after CBDC implementation. Thus, the wallet needs to be able to hold and transact with multiple token types. The wallet will also serve as the main interface for accessing token balances and transaction history. In addition, to support convertibility, the ability to purchase or redeem CBDC for traditional fiat could be performed through the wallet by leveraging a linked account or possibly through an in-person kiosk. Finally, as wallets do, transfers of all types are supported, from B2P, P2P, B2C, and a series of other acronyms. The CBDC platform also has two dashboards, one focused on central bank functionality and the other for intermediaries. For the central bank, they will have the ability to mint, issue, and burn CBDCs. And for both central banks and intermediaries, they will have the ability to create new custodial wallets, perform custodial wallet management, complete disbursement and transfer functions, implement system access management to ensure only authorized users are able to act on their behalf, and access transactional data in support of audit, regulatory, and analytical needs. And of course, this platform can easily be expanded to include new requirements as needed. With the available platform and supporting software, we envision the future monetary system to transform from an analog to a digital system, from issuance all the way to customer spending. Leveraging lessons learned from the current blockchain ecosystem, as Kasima discussed, the new lifecycle involves multiple wallet types and settlement accounts. Highlights include secure issuance of CBDC within the platform, quick distribution and redemption between central banks and intermediary wallets, permanent destruction of CBDC tokens by burning them, rendering them unrecoverable, and easy access to CBDC for a variety of use cases through integration with existing cashless systems or creation of new innovative services. And of course, this is just one possible flow, as the possibilities for a CBDC are endless, just like the ones for cash. And now, I'll pass the mic back to Kasima to answer our final question of why now?
Okay, so Erica just described all the reasons for why we believe our plasma technology is particularly suited for the CBDC use case. And to wrap all this up, I want to address one last question. Why now? Why now for CBDC and why now for plasma technology? First off, it's already headed that way. So by early 2020, 80% of the world's central banks had started to conceptualize and research the potential for CBDCs, 40% were building proofs of concept, and 10% were deploying pilot projects. By 2023, the G20, the IMF, the World Bank, and the BIS will have completed research and selection of CBDC designs, technologies, and experiments. The Central Bank of the Bahamas has just announced that it has deployed the world's first state-backed virtual currency, the sand dollar, with the CBDC now available to all citizens of the Bahamas. As many already know, China has multiple large-scale pilot programs in place, and its DCEP is already serving as an example for other nations to follow. And of course, the rise of digital innovation during COVID-19 has accelerated the pilot phases of central banks' digital currency projects. These are all the reasons why we are focusing on CBDC. I'll talk about why now is a good time for plasma. So as many of you know, OMG Network has been researching and developing plasma for over 3 years. We've deployed 4 public testnets and launched our public mainnet service in June of this year. We've had 3 smart contract audits from 2 of the leading security firms, and we have operational support in place with an experienced and talented technical team. So we believe that OMG Network is production ready for CBDC trials. We're also working on the next generation of our Plasma framework. There's a lot of improvements coming down the pipe. We are working on improving mass exits, providing trustless fast exit protocol, better resiliency and availability, as well as much more exploration on our transaction types, which is a limited form of smart contracts. This will allow us to explore more use cases for Plasma, especially as it relates to CBDC, things such as sovereign bond issuance. The OMG network is also part of a large and growing ecosystem, from blockchain partners like Curvegrid and Tether, to industry partners like Toyota and Citibank, to multilateral partners like World Economic Forum. We're partnered with and learning from leaders in their industry. We have also successfully delivered solutions to local and global companies. Each of these engagements has been a learning experience in understanding enterprise and end customer needs. In particular, our loyalty point projects have created a solid foundation in the minting, distribution, and transferring and burning of tokenized value, all functions that easily carry over into the CBDC sphere. And last but not least, we have an amazing and active developer community that is ready to experiment and innovate on our platform. So, a Plasma-powered CBDC platform can enable a trusted digital currency that enhances financial services and promotes the sustainable growth of a nation's economy. Thank you so much for joining us here. And I think at this point, we are going to pull this into a Q&A.
Thank you so much, Kasima and Erica. All right, everyone, for those who do have any questions, feel free to drop it on the Q&A section at the side of your screen. It's just right beside the chats. We'll be picking questions from there. Okay, leading is, why doesn't Kasima have a mustache anymore?
It was my Movid, which is why.
There you go, guys.
So next one, what utility will there be for the OMG token in private instances of Plasma? So I think it's important for us to take a step back and look at how we're engaging with the concept of CBDCs and how we're speaking to central banks. And a lot of that is really led by how the central banks are evaluating the participants in the root chains for these experiments and projects. So a lot of that is still under development. I think for us, when it comes to the way the token is used, we're open to all the possibilities as we go down these discussions with those central banks in terms of what they need. I think at a fundamental level, the token was always meant to be a way to provide security in our system, and it can still be leveraged to provide security in multiple combinations of public and private versions. Well, we haven't quite figured all that stuff out yet, but it's still very much an open possibility for us.
Great. The next question is, what does it look like in terms of getting your tech implemented by governments around the globe? How will you get noticed?
So our network already has pretty high visibility across the ASEAN region. And so we're already engaging with more than 3 central banks within that region. And this webinar, as well as our new CBDC website, is also designed to help them understand the technology that we have ready and available to implement. Those discussions are also teaching us about the types of concerns and requirements that they're looking for. And so as we get to understand their needs and wants more, we're also able to structure our presentations, our demos, to demonstrate that we already can meet a substantial amount of their needs and that we have a flexible platform that can adapt to solve the rest.
I think one of the biggest hurdles that we have as we approach this is probably the same project around token, the same hurdle around tokenization, which is really just education. And so things like this, things like the CBDC mini site and additional materials that we're going to publish down the road is part of our strategy to try to move those conversations along further.
Great, let me just go through some of these other questions. Could banks and CBDC play a role in fast exits?
Potentially so. I think all fast exit models require some kind of liquidity provider, and so I don't think it may not be technically connected for fast exits. I guess if it's on the CBDC network itself, yes, absolutely. Fast exits for the public network, I think that's sort of a different story. But in the sense that the fast exit protocols that people have looked at basically industry-wide usually involve some kind of liquidity provision, and obviously banks have a ton of liquidity, so that's certainly possible.
All right, we've got a question here from Eddie. Why do you think a bank would adopt OMG over creating their own chain?
So if I understand that correctly, I don't think the plan is for them to leverage the OMG token as the CBDC. It's to leverage our plasma technology to create their own sovereign central bank digital currency token. So I hope I understood that correctly.
All right. Bill Newman asked, have you already collaborated with any central banks related to utilizing plasma technology? How are you seeing this process on a practical level?
We've spoken to a few central banks, as Erica has mentioned. I think the easiest way for me to describe this process practically is that it's slow, and it's also very careful. Obviously, the central banks understand the implications of creating digital money that is central bank backed, and the possibility of that having unintended consequences. So they're very careful about how they're approaching this.
And I think we will be having the last one. Oh, okay, another one just came in. What are the greatest fears and concerns from CBDCs in working with an open protocol like OMG?
Greatest fears from CBDCs? Maybe Erica, you can ask, jump in on the from CBDCs side.
So I'm not sure that there's fear necessarily. As Kasima mentioned, it's all about education. The value of an open protocol, the ecosystem it brings, the developer network that could support it, are all features of a CBDC network that the central banks know and recognize and are actually looking for. And so I think, again, as we're starting in the pilot and POC phases, most of these networks are going to remain kind of private, closed loop. And so in those phases, that's where the central banks will get to understand the technology better, understand their ability to feel comfort in knowing how the tokens flow, how they're created, how they can use the protocols to help, for lack of a better word, control the supply. And so I think through those processes, they're going to very soon realize the benefit of connecting to the larger ecosystem and connecting to the the public networks out there. So I would just say that it's not necessarily fear, more so than just needing better fluency in the realm and feeling more comfortable with how the benefits will outweigh their perceived risks.
Oh, I think we might have just lost Vicky, who is feeding us our questions. Oh, here's Vicky.
Okay. Other questions? Okay, somebody asked, can you explain a bit more about what is the blockchain partner on your ecosystem partner slide and what this means for OMG?
Blockchain partner. I'm not quite sure. Wait, let me go back to the slide.
So I think in some previous presentations, there might have been some misinterpretation of what was meant by the different partners that we had put on a slide. So I think that might be where it's stemming from. So basically, these are all organizations that we have worked with. It doesn't necessarily mean that we have current active engagements, but they are all organizations that we have solid relationships with and can leverage for future projects, such as a CBDC project.
All right, and I think that caps off our Q&A for today. Thank you so much, everyone, for all the questions. As always, feel free to throw over some inquiries or questions that you have. We're always happy to engage, and maybe we could hold another event in the future. But for now, we're closing this off. I hope you learned a thing or two about CBDC and why we're getting involved in it. Thank you so much, Erica and Kasima.